What we have seen is so far the world has had a good year. And this good year has been driven by the tax cuts in the United States, by Japan swinging upward in growth, by sound Eurozone, and by stimulus in China. So countries are doing their bit to keep the world economy going. But we have seen trade disputes undermining confidence. And of course, this is not healthy for the year to come. We know from many decades of experience that trade is good for growth, it is good for jobs, it is good for the poor households. So hopefully what we are seeing as tensions on trade is going to be moderated by understanding the value for the world to stick to open economy. So far, the erosion of confidence has been less profound than we feared, but we should not expect that to stay sound and good forever.
Yes. What did you fear?
What we fear is that...
Well, earlier, you said it's not as bad as we feared.
What we feared was that when you get into trade disputes, trade would trim down very rapidly. That didn't happen. Actually, we had a pretty good first 2 quarters in terms of global trade, exceeding the rate of growth. Now what we see is that investors and consumers are starting to push the pause button. And that is where the longer-term impact may come. What we have seen is that because the total value of what is disputed on the grand scale of trade is still relatively small, it has not pulled the rug under the world economy. However, we worry about that, and actually let's put trade for a second on the side. We worry even more of the impact of increase in interest rates in a world that has 164 trillion debt hanging on its neck. And we worry that for countries that borrowed in dollars, the appreciation of the dollar is going to make the pain even more severe. So we cannot detach trade from the overall context of the world economy.
Are you saying that rising interest rates in the U.S. is a bigger threat than the trade war to the global economy?
It is early to say which one is going to be more problematic. My point is actually different. My point is that there are a number of factors that are what economists would call headwind factors, and their combined impact should be not underestimated.
What would be the impact of the U.S. Exiting the WTO?
The rest of the world is saying, let's wait and see. And actually, I think the conversations are very subdued because nobody wants to predict this from happening, so I won't do that either. Right. It is important for us to recognize one piece of that trade conversation, that it is good in average, but trade has not been good for everyone. My professor of statistics used to say, you put your head in the refrigerator, your feet in the oven, your temperature is average, but you're dead. And I think that that understanding of the negative impact on people who found themselves ill-prepared for structural shifts coming from global trade, that has to be more front and center, and it has to be married to a conversation on the future of technologies and how they change the world we live in.
Clearly, we've seen sort of a divergent reaction in the U.S. market and the Chinese market to all of this trade friction. Their market's been slammed. There are real worries about a slowdown. How does the Chinese economy look to you guys right now?
Well, I mean, what we see is exactly that. There is some softening of investor confidence, and what is actually more important to watch in China, softening of consumer confidence. China is responding with the stimulus. We see that they are quite determined to counter that impact, but obviously we have to all worry, not just China. The rest of the world has to worry because China contributes nearly 40% of global growth. Any slowdown in China has impact on China, it has impact on the world economy, and emerging markets, developing countries, are most at risk.